The high time frame for Bitcoin is undoubtedly bullish. However, weakness is being shown on the smaller time frame, which could result in a pullback towards 28,800. Are we going to see this correction, or will Bitcoin have the strength to push up one last time? Let's go ahead and find out. Okay guys, welcome back to the channel. I hope you're all having a wonderful day today. We're here to take a look at Bitcoin, discussing the short-term price action. We'll be reviewing the technical and structural data, discussing the possibility for a continuation upwards and the current weakness we are seeing on the chart. Could this weakness develop into a correction? And if so, how low could Bitcoin realistically go within the short term and higher time frame while still remaining in the bullish uptrend it is in? Before we get into it, smash the like button, hit the comment button, and of course subscribe to the channel. We do daily videos, guys, focusing on Bitcoin, discussing the general markets, market data, structural and technical analysis, no BS, no hype, no emotion, pure raw data, probabilities, and of course technical analysis. You can find us on Telegram if you're interested in more content. This will be the second link down below. Get access to charts, updates, descriptions, analysis, videos, information, educational posts, news events. Everything you need is in this channel, guys. If you're interested in supporting the channel, I highly recommend trading where I trade on Bitget, the best exchange out there. 15% off your trading fees if you sign up with this link over here. And of course, that link is the first pinned comment. You'll also get access to a whole range of exclusive bonuses and perks if you do use that link. If you're interested in trading, you can join our VIP channel. We do daily trading signals with exact entries, exact targets, exact stop losses, such as this one over here, AAVE. We just had the first target reach. As you can see, entries, targets, stop losses, everything is set out with exclusive charts and so much more. You'll also get access to our exclusive group chats, our general chat, our trading chat, and so much more with so much information. And guys, just the value in this VIP compared to the cost is absolutely insane. So go ahead and sign up to it. More information and of course our entire trading track record can be found in that message. So let's go ahead, guys, and get into a video, because again, so much content, so much information I want to share with you guys today, so much to learn, so much to see. So let's dive in, starting off with the market data. How are we looking? April, 5.28%. We're coming in now to Monday. It is obviously Monday in Australia, coming to the end of the weekend in the US. So volume is naturally going to start to jump up again. We're at 74 billion, up 40%. And of course, liquidation data at around 93 million. So quite high there, up around 112%. And a lot of these liquidations coming in within the last couple of hours, particularly on the small little pullback we had on Bitcoin, which we'll discuss in today's video. Again, a lot of these liquidations coming from late longs. We saw early shorts liquidate. We warned you guys in yesterday's post in the Telegram channel that we were expecting to see a small climb upwards. We saw those early shorts liquidate, and then we saw a large pullback liquidating all of the late longs that jumped in above that trend line. So a lot of chop going on, a lot of liquidations both ways, both sides of the coin getting burned. Looking at the broader markets, the DXY has actually confirmed that engulfing candle on the daily, so it does again look like it's developing a double bottom. However, the double bottom does need 3 points of verification. Point number 1, candlestick. We have that. We have a bullish engulfing. 1 point. Point number 2, horizontal support. We have that. 2 points. Point number 3, we need a trend reversal, okay? We need all of these 3 points of confirmation to verify that this double bottom is in fact a double bottom, and it will continue upwards and not just a lower high that is going to eventually break back down. So we are looking for a breakout of the current trend we have, this current downtrend, to verify a uptrend will develop. If the uptrend does develop, we are going to see the broader markets such as the S&P 500, Dow Jones, and even Bitcoin struggle / possibly even pull back a little bit at their respective higher time frame resistances, which we are currently experiencing resistance at. Looking at the S&P 500, you can see we have come up, we are retesting this local top range, okay, forming a potential double top as DXY forms a potential double bottom. This is a horizontal resistance. We had deviation from resistance. Delete that. We have a strong neckline of resistance, which has lasted around 356 days, so nearly a whole 1 year long resistance now we are challenging. Again, long resistances, strong resistances become strong supports. Strong supports become strong resistance. If we break above this level, which could very well happen if the DXY actually breaks downwards, we will see a strong move upwards, which will clear this entire range here and result in a high time frame uptrend to develop on the S&P. Of course, we know Bitcoin and traditional markets are correlated. They're positively correlated to a degree of 0.7. So we will most likely see cryptocurrency rally as well if the DXY falls and if traditional markets break up. Looking at the Dow Jones, the respective resistance is of course this level over here. You can see it represented by this red box. Again, breaking over this neckline of resistance will result in a strong move upwards. Again, quite a long neckline of resistance, around 350 days as well. Again, DXY breaking down will result in a continuation upwards, which could push it to the next leg. Until then, we are at resistance on traditional markets. If we're at resistance on traditional markets, if we're at resistance on the DXY, this does open the possibility for a correction. Will the correction in cryptocurrency take us to new lows? Very, very, very unlikely. The bottom is pretty much in. I have bought 16,000, I sold at 30,000. I sold at 30,000 to basically manage my risk and take my profits. I can always buy back in 2 or 3% higher if I need to, but I'm taking that 2 or 3% as an insurance against a possible correction, which could take us back to 28.8 or 25.2, which we'll talk about in the short-term analysis today. So let's go ahead, guys, and get into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. And we'll really quickly describe what is happening on the short term, and then we'll get into everything else. So currently on the short term, we have a few annotations I want to run through. We are seeing a high time frame uptrend develop, and the high time frame uptrend has been developing now for quite so long. In fact, it's been developing and has been developed since around 18,400, since we broke out of this downtrending resistance here according to our falling wedge structure on our chart. We've been in a high time frame uptrend ever since we've continued. Every single time we clear these local resistances, these high time frame resistances, the strength of the trend increases. It develops. It transitions from a weekly trend, from a daily trend into a weekly trend, and a weekly trend into a monthly trend, and a monthly trend into a yearly trend. We're currently retesting our next horizontal resistance, and we are above it here, guys, on the weekly. Of course, we closed above 30,000 on the weekly. However, as we've been saying, the weekly isn't very important. The most important close we need to see is going to be the monthly close. Why do we need to see a monthly close? Very simple, guys, because this resistance is greater than 365 days. If we have a yearly long resistance, we need a monthly long close to validate the break. If we have a weekly, we need a daily. If we have a monthly, we need a weekly. If we've got a yearly, we need a monthly. We break it down, guys. Higher time frame validations for higher time frame resistances. There's no point waiting for a 1 hour break of a yearly long resistance to validate that that level has been broken. The probabilities or possibilities of fake outs or corrections is still there. Remember, we're not saying the price will correct. We're saying that while we have not validated the breakout, we don't have enough confidence to hold our positions here. Therefore, we have let go of our positions that we bought at 16,000 for very large profits, 150,000 plus US dollar profit. And we're going to wait. We're going to be patient. We're going to wait for verification, and then we will jump back in and then move our stop loss underneath that high time frame support that is now flipped. So we are playing it a little bit safe here, and there's a reason for that. Let's go ahead and talk about the short term. So currently on the short term, and really quickly, this area here, this entire range on the short term, if we zoom out, we'll show you exactly where it is really quickly. We'll go to a daily chart. You can see this range of the short term is basically sitting around about that 30,000 range. If we go ahead and draw our ranges in, right, we had our 24.4 to 25.2, we had our 28 to 30,000, and this range here is kind of just sitting right above that 30,000, that short-term range. So the zone we're looking at today is this cluster of price action that spreads under, above, and between the $28,000 to $30,000 resistance. So let's go back to that chart. So currently we have a higher time frame uptrend. I'm gonna go ahead and delete some of this stuff over because we'll talk about it in today's video. So we have this uptrend. This is our overall structural uptrend of the current trend. You can see this is our higher time frame structural uptrend. This is our daily uptrend currently. We have a smaller time frame. This is our hourly uptrend, okay? And then we have our ranges. This is our local range high of the current range between 26.8, okay, towards 28.8. If you remember this range up to a few weeks ago, we said a break above 28.8 will result in a strong push to 30,000. Within the current short-term price action, we have an additional two ranges. We have the range between 29.8 and 29.9. This is providing our base of support within the current price action range. If we zoom in even more, we can see we have our upper resistance. This is our local resistance. So this is our range low, this is our range high, the blue line, and this is our local resistance, or what you'll call a trigger, a bullish trigger. It's a bullish trigger because we're below it. If we're above it, it would be a bearish trigger. A trigger meaning a point on the chart where there's so much confluence where if the price were to break above, it will result in a continuation in that direction. That is what a trigger means. So we've currently come down and retested this support level. As you would know, while we are pushing horizontal in a channel, we do not have a confirmation on the direction, okay, direction being the break, until we have validation that the resistance on either side has been broken. So what we're looking for here is two things. We're looking for a break on the hourly chart underneath 28,000. We don't need this a wick, we need a candle close below 28,000 to verify that this current range has been lost. Now, the consequence of that is we will be entering a very, very low volume range on the VRPV, as you can see right over here. What does this represent? It represents that historically there is very little resistance within this range, as we have seen the prices push through that range with immense volatility. Generally, when we have these low volume ranges, we don't need as much volume to push through, / the trend is more aggressive while we're within those ranges. Therefore, if we do lose this low, we can expect a potential crash all the way back down to retest either the support chunk here, the uptrending trend line, or find support at around 29,200 on this little hump on the VRPV. Okay, so a pretty strong move toward the downside could occur. This move toward the downside would, as a result, push Bitcoin back towards the lower section, okay, the lower section of that current $28,000 to $30,000 resistance. Okay, so technically it would push it back towards this lower black line to support the lower resistance range, validating that this was deviation above resistance and a potential fake out for the price action. That is obviously not a very good thing. If we start to push below 28,000, the probability for a move towards 25,200 increase. As you can see, we have decreasing resistance here, okay? Decreasing resistance equals increasing volatility as the price pushes through, even with low volume. So the gap in this range over here could be very well filled if we do lose 28,000. More importantly, if we do lose that uptrending support, that daily uptrend support represented by this trend line over here. A loss of that could push Bitcoin back down to 25.2. So on the short term, guys, there are some very, very dangerous things occurring from a structural point. We are kind of on a knife's edge right now in terms of holding above 30,000. As you can see, we've been above 30,000 now for about 5 or 6 days, but we haven't really made any solid ground above. We are still flirting around that $30,000 mark, and we are either going to get a strong move, which will result in a correction. The correction will remain bullish. As long as we stay above 24.4, the trend is still up. the trend is bullish as long as we remain above 24.4. If we lose 24.4, that is when it gets a little sketchy again. We're not going to talk about today, but the trend is still aggressively up until we lose 24.4. Now, I do not think any of this is going to occur. This isn't my opinion. My opinion is based on my action. If you want to know what I think, look at what I do. But this is the probabilities. We're talking about the possible scenarios. So if they do occur, you know what to expect. You're not chasing your tail. You're not running around panicking saying, MegaWhale, what do I do? What do I think? No, we've already told you what to do. We've already told you what to think. We've already told you the triggers and what to expect if that occurs. Let's talk about the upside. The same thing on the upside, guys. If we break upwards from this horizontal resistance here, the trigger, we are expecting a move to a range high. Now, if we break the range high, we can flip the chart. It's going to be exactly the same thing. If we lose this high here, we can expect a move back upwards. Where could the move upwards take us? Very straightforward stuff. Let's go to a daily chart, guys. We'll be looking for the next range on the BRPV, or the next area of resistance. So we're looking for these little jump ups in the BRPV. You can see over here, spikes in resistance. This is kind of what we're looking for next targets. So we're looking for anything between that range, around 31,700, okay, to around 32,300 will be that next bullish target if we are able to break above the range high for the short-term price action. Let's go ahead back to the short-term and do a quick technical analysis, guys, from the 4-hour, from the 1-hour, and from the daily, and then we'll wrap up the video. If you want to find out more about the macro charts, higher time frames, 4-year cycles, overall trends, go watch yesterday's video. That is all in there yesterday. We'll do a complete 30-minute analysis. We're not really talking about today. Go watch yesterday's video. Go find out the information in there before you post questions about it, because it's all there. We spent 30 minutes doing it. So let's take a look at the daily to start off with. So let's do a daily to start off with. How is the technicals looking on daily? So currently, we obviously have a potential bearish divergence in play. We have decreasing momentum. We have rising price. And still, nothing has changed in this regard. While we are at high time frame resistance, that being the 28 to $30,000 level, and we have decreasing momentum, we have divergences showing, this is something to be concerned about. This is a warning sign. This is stuff we use to predict the bottom, and we're just flipping it now. It's exactly the same thing, guys. Flip the chart if you have biases. If you have a bias, flip the chart, and you can see we have a very clear, a very strong and very clear downtrending support right over here, guys. If we were to break below this downtrending support, which in essence means upwards, we would need to see a very strong push, a lot of volume to really wipe out these divergences, to really flood into the market. Again, even if we do push upwards, we can see that trend line, it pushes to 31.7, it pushes to 32.3, it doesn't go much higher. Therefore, this range up here that we're looking for potential resistance, we could definitely tap into, but we do have weakness in the trend. We can see we are printing another red dot here on the market side for B. We have divergences on the RSI. We have divergences on the market side for B. The VRPV suggests we're at a degree of resistance. And again, everyone in the charts comments who are perma bullish are going to say, MegaWhale, the larger time frame, the larger time frame. Yes, look at the larger time frame. Go watch yesterday's video. This is not about the larger time frame. We're talking primarily about the short-term price action, what can happen within the next week, where the price can go. If the price goes down to 28,000, it doesn't delete the macro uptrend. The macro is still in a very strong uptrend. If it goes down to 25,000, we're still in a macro uptrend. So don't blind yourself to these short-term corrections that you can capitalize on because you're overly bullish. I've been saying it down over here. Everyone was expecting $10,000. I was saying we are not bearish anymore. The trend has been gaining strength. The market's looking bullish. The economy is turning around. The technical data is suggesting bullish confirmation, bullish continuation, bullish compression, decreasing volatility, volume, momentum, liquidity. Everything was suggesting upwards, just as everything here was suggesting upwards. The only reason people expected upwards was they were looking at high time frame charts for short-term corrections. Short-term time frame determines high time frame. It goes short term, what occurs on the short term will eventually translate to the high time frame if it develops on the short term for long enough and strong enough. Okay, it's not the other way around. The high time frame doesn't determine the short-term moves. The short-term moves determine the high time frame moves. So if you're looking for horizontal resistances, if you're looking for reversal points, I've said it time and time again. And not only have I said it time and time again, you've seen the proof of this if you've been watching this channel over the last year. If you're looking for reversals at structural levels, do not use technical indicators, use structural data. Diagonals, horizontals, volume ranges. Don't go sit there and use a MACD on a 3-day chart. Because the MACD even the 3-day chart's lagging. Of course it's saying we're going, look how bullish it looks. It says we're going to the moon. But everyone looking at this here saying, oh, I'm going to buy, I'm going to go, it's going to the moon. And then on the, on the 1-day chart, on the 4-hour chart, we get a crash. They're thinking, oh, what a scam market. No, you just weren't looking at the data correctly. Short-term translate to higher time frame. Now, this isn't me saying the macro is bearish. The macro is incredibly bullish. What I am trying to get into everyone's heads here is, we are in a point of massive confluence. The DXYs are support, the traditional markets are at resistance, Bitcoin's at 30,000 yearly resistance. We're seeing this level hold as support for a very, very long time. We're seeing bearish divergences, we're seeing weakness in the short-term trend. Yes, we can push higher, but we're not going to just continue upwards only. We're going to see at some point a correction. If the correction occurs, I'm telling you where it's going to start from, and I'm telling you the targets it can take us to. That is what I'm doing. You can sit in the charts, you can disagree, I don't care what you think, because these aren't even my opinions. I'm simply translating what the chart's saying. What are the charts saying? Decreasing momentum, increasing resistance. It's finding difficulty to break and remain above 30,000 or higher time frame. We still haven't validated the breakout. Technically, we've only deviated above. We haven't even validated the breakout, okay? We are in a macro uptrend. The macro technicals are looking strong. There's a very high likelihood we continue upwards on the higher time frame, but the smaller time frame, there is a probability that we do see a rejection. If we do see a rejection, these are the targets. And we haven't even started to see that rejection develop. As we've said, guys, we do need to see a few more things to validate, to tick off that potential correction. More importantly, we need to see a break of this 28 or 29.8 level in the short term. Even then, if we come down, we are still looking great. We need a breakdown of 28.6. Even then, we're still looking okay. We need to lose 28,000. Only then are we starting to look a little sketchy for a higher time frame pullback to around 25.2, guys. So there's a lot of support below us. There is so much support below us, it is looking phenomenal. It would be ridiculous to say the high time frame is bearish. However, what we are saying is, while we're noticing these structures develop, while we're noticing momentum weakening, we do need to be aware that the pullback is there, it is possible, and if you blind yourself to it, as everyone who is not listening to me down at the bottom, over here at 16,000, I said for weeks, for months I was saying the bottom's in, for months I was saying accumulate Bitcoin in these ranges, for months I was saying the bullish reversal is going to occur, it's going to take us to 30,000, just I was saying over here, at this range where I officially flipped bearish, no one was paying attention. Very few people were actually paying attention. So when I say this again, pay a degree of attention. Do not just listen to this and ignore it. If you are in a long position, manage your risk. Don't sell your positions with a high time frame bullish, but manage your risk. Plan. Think about, what level would I have to close my position at? Where would I want to reach my max drawdown? How can I position my macro capital? Look at your current position. Look at what you're not in. Look at coins that are looking strong in comparison to Bitcoin, as of course the macro trend is up and Bitcoin dominance is falling. Prepare, guys. You have to prepare. You have to plan. If you're just executing every day, coming to the charts, type in a random coin, oh, how's this looking, and executing, you're always going to be chasing the market. You have to have a plan, and your plan doesn't have to play out. But if you have multiple plans and one of those plays out, you can jump on that train and catch that move upwards or move downwards according to the various plans you developed prior to the move. So again, I'm going to stress one more thing. The video is not telling you we're going to crash. The video is not saying we're bearish. The video is saying we're macro bullish. The short term is looking sketchy. We are seeing indicators on the daily that are suggesting we are struggling at this resistance. We are at the resistance. We haven't broken above and confirmed the break above. These things should be red flags in your head. And it doesn't have to result in a macro correction. It doesn't even have to result in a correction, but they should be things on the chart. I'm trying to train you guys to think about like how a trader thinks. These are things you should apply to your analysis and apply to your risk analysis of the current price action when entering higher time frame and short time frame positions. I see a lot of people right now incredibly euphoric, taking massive risk on positions, entering Bitcoin at these levels on high leverage, expecting the prices to fly upwards, when in reality they are quite literally months late. There's plenty of people in my comments trying to one-up me, tell me they're mega bullish and I'm wrong and whatever, when I was telling them to buy down here and they weren't listening, guys. You have to pay attention to charts, pay attention. Do not be a sucker. Do not be late. Do not use your emotions. Really focus on what is happening. I'm going to leave the video. I went on a massive rampage at end. I'm going to leave the video. If you've got any questions, leave them down below. If you're interested in more content, join that Telegram. You can find us on Crypto Academy if you want to learn how I trade. You can find me over here. All information, updates, charts, analysis videos. It is all in here. Thanks for watching. See you tomorrow.